Hello folks, welcome to the World According to Bob YouTube channel. Today was not a good day for most of us. It's the day after the tariff started, and if you haven't been watching the news, it's been really bad. So today the stock market dropped 1,679 points just in one day. The NASDAQ dropped 1,050 points. For those who don't know what those mean, for us, the NASDAQ is short for National Association of Securities Dealers Automated Quotations. And the Dow, which is the top 30 companies, that's stuff like Apple, Coca-Cola, Microsoft, Boeing, Walmart, Nike, McDonald's, Goldman Sachs, and other big companies that you may have heard of. But anyway, the stock market's had a lot of bad crashes in history. For those of you who maybe remember Black Monday, that crashed 500 points in one day, which is nothing like what happened now, but that was 22% in a single day. That's the single largest one-day percentage drop in history. That recovered 2 years later, but that changed reforms in the market circuit breakers because there was a lot of computerized trading, overvaluation, and investor panic, which there is right now, a lot of investor panic. Then we also had the dot-com bubble, if you remember that, from the year 2000 to 2002. That's where the NASDAQ crash fell nearly 78% from the peak. I remember a lot of companies were laying off like crazy back then, like Nortel Networks, I think lost about 100,000 jobs. That wiped out trillions in the market, and they had a long bear market for years after that. Then they had the global 2008 crash that all of you know about. That started in 2007 and went to 2009, which went even further than that. But that's when the Standard & Poor's lost more than 50% of the value. That's huge. So if you were retiring that year, you really got screwed. That's when all the housing bubble crashed and everything. And we had the subprime mortgage problems and the Lehman Brothers bankruptcy, if you remember that. That was not good at all. And then we had the COVID crash. That was in March of 2020. That was right after Biden became president. And that was pretty bad too. I think that was almost 3,000 points in a day. So it's double of the amount of points that we did for today. And then we had a flash crash back in May of 2010. That was 1,000 points. But then it came back real quick. That was algorithmic trading gone haywire, they said. And we've also had some other ones like the oil embargo from 1973 to 1974, which I remember that. I remember the gas lines as a little kid, where people were only allowed to get like 5 gallons of fuel. They had limits to how much they could do. And that was not a good time. But yeah, so my portfolio dropped, which I don't have that much in there, dropped about 5%. So it'll rebound about 4 months. Whatever you see as a loss today, it'll come back. So you don't need to panic. I don't know why so many people are panicking in the market. They should just forget about it. It'll come back. The only people that have to worry about it right now are the people that are going to retire like this year. If you just turned 65, you may have to work a little bit longer because you don't want to take out any of your money out of the stock market at a loss. You want to sell during a peak. And normally, you should have a large cash reserve put away. So that way you don't dip into anything in the stock market. And then when the stock market goes back up to normal, then you stop taking out your cash and you take out all the money from the stock market. And then you go back and forth and you only fall back on the cash reserves during an absolute emergency like we're having right now. So that's what I would recommend doing. If you have the cash reserves, which most people don't, but that's something they should have taught us in school, which they never did. And I think all of us have been investing since we were 20 years old, and until 65, we would all become millionaires, whether we liked it or not, just by steadily investing, $200 to $500 a month over a 30 to 40 year period. you'll become a millionaire just by compound interest. Just simply by putting money into the Standard & Poor's 500 group of the 500 top companies in the US. You'll be set for life. And that's just slow growth. They all have crashes. They all go down, but they always recover, and they have for the last 100 years, no matter how bad they were. So there's no reason to panic except for those few that are going to be retiring this year or this month. And I wouldn't want to be taking anything out right now, because right now mine are at a loss, and I would lose money if I were to sell anything. So I don't plan on touching anything for at least 10 to 15 years. So it's not that big a deal. My message is to the young people. They think, I'll just invest when I get older, but you can't, because you'll have to make up so much more and pay 4 to 5 times as much to make up for decades of not investing. And that's the point I'm trying to get across. And when I talk to young people about it, they don't seem to have an interest. But when they're in their 50s, then they're going to look back and say, oh my God, I should have listened to that guy when I was young, because now I don't have any money. You don't want to be in that position. You can play the lotto all you want, but you have a 1 in 292 millionth of a chance of winning that, so forget it. It's easier just to do the slow way to wealth, and that's by investing money over a long period of time. That's the best advice I can give, which I know a lot of people are not going to listen. But you'll remember this when you're old, that the world according to Bob's YouTube channel told you to invest, and you said, nah, I can't afford to. Yeah, you can. You can put $10 or $20 a week into a fund. Open it up, go on Fidelity, transfer some money in there and forget about it. And you make it a habit of slowly doing it. Eventually you'll get better at it, and then you'll start having more and more money. And then you'll find things to cut back on. And then you'll eventually put more money in there, and you'll pay something off, and you say, okay, instead of making that payment on that thing, now I'm going to send the money to Fidelity instead, because I like watching it grow. So that's all I can tell you for today. I'm sure you're going to see all over the news, all the bad stuff that's going on. Who knows how long it'll take for these tariffs to really start affecting all of us. But it's scary. I got some other news to talk about some co-workers. Their commissions are going to be suffering greatly. I mean, I'm thinking they're going to be getting 70 to 80% pay cuts from this, because they're commission based. But I can't go into a lot of detail about that right now. I guess that's it for now. I'm signing out. And thanks for watching, and I hope you subscribe to my channel, because I could use the views. And all right, take care. Good night.